Welcome to our webinar, How to Resolve Your IRS Tax Debt. In this webinar, we will cover the topic of IRS letters. We'll always hope that we never receive an IRS letter, but that is not the case. Taxpayers receive letters that they do not recognize, and the objective of this webinar is to get you familiar with the type of letters that the IRS will mail when there is a discrepancy between the forms that the IRS has received and the income reported on your tax return. Those forms that the IRS receive are typically 1099s, W-2s, Social Security income, investment income, retirement income, and so on. The first letter that the IRS will mail a taxpayer when there is a discrepancy between the forms that the IRS has received and the income from those forms that the taxpayer has reported on their tax return is letter CP2000. This is the first letter that you should receive when there is, or if there is, a discrepancy between the income of your tax return and the income information received on the forms from the IRS or by the IRS. And the second element that is very important is what year is this letter for. The IRS doesn't send letters, or the IRS sends letters many times from different years. If we are, for example, in 2021, the IRS will send you a letter from 2018 or 2019 or 2020, because there is something that is called the Statute of Limitations. The IRS has 3 years back to audit you. 3 years, but you have to count 4. Because we always report the year after. So 3 years back of the year you are filing are the 3 years that the IRS has the ability to audit you. Beyond the 3 years, the IRS will not be able to audit you because the Statute of Limitations is closed. So for this example, year 2015, the 2015 year is within the Statute of Limitations. The IRS, it takes time for the IRS to audit you or to receive or review the information between doing the matching from the information that the IRS has received and the information that you are reporting on. You reported in your tax return. There is usually a lack of time. Just to give you an example here, note that this letter is dated June 2017, but the tax year is 2015, even though the form is reported in the same year. The 1099, for example, the W-2 is reported in the same year from the employer, in this case, when you report your income tax return. So the employer sends a W-2 to the IRS. The employer gives you a W-2, and you report that on your tax return. This happened in the same year, but the IRS takes time to send you letters when there is a discrepancy. Just to give you an idea here, an example, the year is 2017 and the letter on the tax year is 2015. If we take as a reference this letter, the date of this letter 2017, the maximum back time that the IRS has the chance to audit from 2017 is 2014. 2014, 2015, and 2016. That will be, if we are in the year 2017, that will be the maximum. 2014 will be the maximum back year that the IRS is able to audit or to review your tax return. Beyond that, before that is not possible. So there is always 3 years back from the year that you are filing or the year that the IRS is asking you for the information. So in this case, this letter is for 2015. The IRS is asking for some a amount of $3,791, and the IRS is informing you of some changes to the form 1040. Why the IRS is able to send a letter if we are in 2017, if the date of this letter is 2017, but the IRS is sending you a letter from 2015? Remember that this is because of the Statute of Limitations. The Statute of Limitations means that the IRS has a 3-year back period for auditing you, for reviewing your information received when you file your tax return. So if we are filing for 2017, the IRS I will have to count 3 years back without the 2017. So if I omit 2017, it will be 2016, 2015, and 2014. That is the statute of limitation. You never count the year that you are at. You never count the current year. You always omit the year that you are at and count 3 years back. So because of that rule, 2015 is within the statute of all limitations regarding year 2017. Because this is within the statute of all limitation, the IRS is asking you an additional tax for $3,791. And the IRS is telling you that there are some changes to your 2015 form, Form 1040. Form 1040 is the form for the individual tax return. On the second page, the IRS is going to tell you what the changes are and where this information comes from. If you come to the middle of the page, there is a section here, explanation of changes to your form, Form 1040 of 2015, and the detail of the additional income is, in this particular case, a Form 1099. This Form 1099, just to give you an idea, Form 1099K is the form that a vendor reports to the IRS and give you a copy when there are payments. For example, when you have a merchant account, you have a business and you receive income, you receive payment from your clients from credit cards. That is a 1099K form. There is also 1099 miscellaneous. Whenever you receive income, there is 1099 for rents, there is 1099 for dividends. Different types of 1099 forms. They all mean any income received out of W-2s, out of employment. In this case, a Form 1099K is received, and there is a discrepancy between the return and the amount reported to the IRS. So the return says that there is a $62,029 reported on the return in the Form 1040, but the IRS has a different number, $75,976. There is a difference of $13,947, and this is the income that is creating the additional taxes on this letter that the IRS is claiming. Because of this, 13,947, 947, the IRS has calculated new taxes, and those taxes are 3,791. That amount is a claim from the IRS. But remember, whenever there is a 1099, there is also expenses. If there is additional income reported here, and this is a 1099 miscellaneous, for example, this will mean that there are expenses that the taxpayer that you can claim against this 13,947. In this particular case, if there is a 1099K, this is income received from merchant. So the most probable thing is there is no additional expenses here because this is from a merchant. Unless you forgot to include any expense. But here, if this is a 1099K, this is income that needs to be reported. If there is income, if there are expenses that you need to attach to this 13,947 and you have the records, it is your right to report all those expenses against this income. If this is a 1099 miscellaneous, or even if this is a 1099K, you do have income expenses to report. For example, for taxpayers who do Uber or Lyft, Uber and Lyft, they provide their drivers with a 1099K. But because it's a 1099K and the driver has real expenses against that income, the taxpayer, the driver, will be able to claim those expenses against this additional income. So before agreeing with the IRS that you have a debt of 3,791 and send the IRS a check or creating a payment plan, it is a good idea that you get familiar with these letters. And that is the objective of this webinar. So once I know that there is a difference of income with my taxes, that I have a 13,947 additional income, I am going to report the expenses. And as a bit of advice here, if you have to report income and you are going to match that with expenses, never create a loss. Do not ever report a loss when you have a 1099, because you will be given reason to the IRS to audit you, to send you a letter and ask for more information. And if you do not provide backup to the expenses that you have reported, the IRS will disallow all those expenses and you will have to pay even more taxes. So it is better to play safe and never report a loss. Never report a loss when you have a 1099. Report always a profit and pay the amount of taxes that corresponds to your level of profit in this case. But in addition to that, you need to have real proof. For example, this additional income, I can claim miles, auto miles. But to claim auto miles, I will always advise our clients to have records, to have real information. You can use an app, or you can create a handwritten journal with the date, the place, the name of the client, and what is the business that you dealt with the client when you met the client for claiming those miles. So make sure you have a record, a written journal, or you use an app for creating a journal for your miles. Same thing apply with entertainment. When you are taking your client for lunch, always keep copy of the bills and write on the bills the business that you discuss with the client. Once we know that this is the reason, there could be other reasons as well for discrepancies. In this particular case, it's a student interest loan, and the reason of that report, well, this is form 1098. This 1098E form is the form from this student loan interest, and this is because there are some interest or additional expenses paid that you have not reported on your tax return. Once you get familiar with this, there is here on the top of the second page of the corresponding of the mail you received from the IRS. The IRS is going to tell you here the changes shown on your tax return and how the amount of money is being created. How? So there are changes on the tax return, $62,000, as we said before, that is reported on your tax return, and $75,000, that is the actual amount. So this is creating the $13,947 additional income. This is, and also the computation. There is a computation of income here of, and in this case is 3,605 from the additional income. So once you are familiar here, it's also good to know that the IRS has some two kind of penalties. The first one is the penalty, the failure to pay penalty. And whenever someone doesn't pay taxes at the time that they are owed, for example, if you are a 1099 income tax reporter or income tax payer, 1099, if you are self-employed and you get paid with 1099s, you are supposed, or you are obligated to report taxes a quarterly basis. Whenever that is not paid, the IRS is going to assess a 0.5 monthly penalty. 0.5 monthly penalty up to 25% of the taxes. So penalty is 0.5% monthly from the amount due, up to 25%. In addition, the IRS also will give you or will penalize you with interest. And the interest will come on the next page. In this case, page 5, interest charges. Percentage in this case is 4%. The IRS will tell you the percentage that has been applied, 4%, 5%. And this is also calculated in a monthly basis. And in this particular case, the interest is 186. And that is here on the first page of the letter. There are some interest. This is the only penalty, because there is no penalty for not payment, because you already pay taxes when you file your tax return, and this is an additional income. So there is no penalties for not payment because you paid already your taxes. This is there is only interest because you didn't include your income, this particular income, $13,000, and 47 were not included in your tax return. Therefore, the IRS is giving you interest penalty. Many times we see that clients do not receive this letter. So whenever you do not receive this letter, that there is a self-explanatory numbers and reasons why there is a change on your tax return, there is a second letter that the IRS is going to send you. This letter is CP 501. But the difference with this letter is there is no explanation. They are only telling you you owe money. This is a shorter letter compared with the 9 pages of the previous letter, CP 2000. Letter CP 501, there is only 6 pages, and well, what they will basically tell you is you haven't paid taxes. The next pages will be the calculation of these penalties and what you have to do. If we go back to the previous letter, CP 2000, on this letter, CP 2000, the explanatory letter, they will even give you the option for you to agree with the changes. Pages 7, 8, and 9, there is a form here. On the letter CP 2000, there is a form that if you agree with the changes, you just need to sign. Indicate if your agreement or disagreement. If you agree, you sign and you send a check. And then the deal is done. Then there is nothing else to change. If you do not agree, with the changes at the IRS, you will not agree with them, and you send them this letter at the address of the letter on page number 1. You will need to give your authorization, signature, date, telephone, all the information, and then you tell them that you do not agree with this letter, with these changes, with the there is the form at the end. The response form can be mailed to the IRS in a self-addressed envelope that the IRS will provide you with this corresponding. But then, the letter at the IRS is on the first page. This is the nature of letter CP 2000. It's composed of 2 parts. The amounts that you owe with the explanation, and in case you agree, at the bottom, the last 2 pages, there is a section where you need to agree or disagree with the changes, and they will give you a telephone number. They will give you a telephone number here where to call. And I am going to show you whenever whenever you disagree with the IRS, it is a good idea to start with the information that the IRS is giving you, is providing you in the letter. So once you tell the IRS that you do not agree with the changes, the next step is to file a amended tax return. You have to amend your tax return, and we will also do a webinar with the details of how to amend your tax return and give the IRS the information that will create a lower tax amount. The idea of filing a amended tax return is to reduce the amount of the taxes that the IRS is claiming. In this form, meaning that you do not agree, you tell the IRS that you do not agree, This is the response form. You do not agree, you have to provide information. And also, if you agree, obviously, if you agree, you sign, you say you agree, and you sign, and then you have to decide if you send a check or you set a payment plan, or if you do not agree, you need to send this information to the IRS with the corrected amount, with the corrected forms. Why you believe that this information is not correct. You have to tell them why you do not believe that this information is correct. You have to provide also at the end your full name authorization, and the IRS will give you a fax at the last 2 pages, or in the last page. Yes, in the last page, the IRS will give you a fax number where you can fax the information. We recommend to our clients that whenever they have a letter like this, they get familiar with the letter, or if they get familiar with the letter, they act immediately. You need to act immediately. You cannot, because you have 30 days. If you do not act in 30 days, the IRS will charge penalties for interest and penalties for not payment. But this is when you receive this letter. What happened when you do not receive this letter? When the details of all this information is not received? That is letter CP501. When the letter CP501 is received, this is just the information. Just the information that you owe money. And here you will have penalties and interest charges. Obviously here I have no idea what this letter is for. Whenever this happens, I have the option. They will give you an information here for information number to call the IRS. And that number is 1-800-829-3903, 1-800-829-3903. And because you don't have the detail, you have to request the IRS for 2 things. The first one is, send me please copy of the original CP2000 letter, of the letter with the details. That's one. Second, send me please copy of the transcripts. In this case, it will be wage and income statements for the year of the letter. Those are the 2 elements that you need to request to the IRS. Copy of the original letter. Sometimes they will say, we don't have copy. Then you need to request the statements, the wage and income statements for the year that the IRS has sent you the letter for. The wage and income statements are printouts of every important tax document, such as W-2 and 1099. And this is the information that you need to have in order to determine why there is a discrepancy between the IRS information and the information you reported on your tax return. This is your first line of defense. If you do not do anything after the first letter, the second letter, CP501, when they say your amount you have unpaid taxes, 30 days later there is a third letter where CP503, and this letter will only tell you second reminder of amount due. Still, there are interest and charges and penalties, but they do not give you any explanation. They send you even a ticket to pay. Again, if you do not receive, if you did not receive letter, the full letter CP 2000, or you didn't receive letter CP 501, the first reminder, and you are in base number 2, CP 503, or on the third letter, you need to contact the IRS. They will give you a number here. You can contact that number, or contact, there is you can contact the number that the IRS is giving you, the letter, or you can contact the IRS at this number, 1-800-829-3903. Whenever you contact the IRS at any of those two numbers, you need to ask them for two things: copy of the original letter to see the discrepancies, and also send me the wages and income statements or the transcript for the year of the letter. But if at this point you still didn't do anything, or you have not received the letter, there is a final letter, letter CP 504. Once you receive this letter, this is the last one. This is when the IRS is going to levy your property, any property, cash at the bank. They can put a lien in your house. They can kidnap your tax refund. For example, like this example, you intend to levy your state tax refund. Even your state tax refund can be levied. So if at this point this is the letter that you received, it is critical that you act. These letters are designed from specifically this letter, notice of intent to seize. This specific letter is the ultimate, or is the last notice that you will receive from the IRS. After this letter comes the levy, the seizing of your assets. At this point, you need to call immediately the IRS. And in addition of asking the original letter CP 2000 and the transcript, the wage and income statement for the year of the letter, you also need to ask them for 30 more days. And they will give you. But you need to call them. You call them at the telephone number that they give you. They give you a specific number, 1-800-829-8374, or you call them to the 1-800-829-3903. This, in my opinion, is the best number to dial because there is the shortest call waiting, and they have the most knowledgeable operators. Wait for someone to answer you and ask if you are at this level, letter CP 504. You need to call them immediately. It's an emergency, and you need to request the original letter CP 2000, the transcript, wage and income statements, and in addition you need to ask for 30 more days. Once you have determined the information, they will send you wages and income statement, and they look like this. This is how a typical wage and income statement looks like. Is a file that records with records of every form that you have received from employers. In this example is W2 wage and tax statement, Form 1099 miscellaneous, and another Form 1099 miscellaneous. This is the ultimate proof that the IRS is giving you for you to make up your case. This is how a transcript look, and let's see the information. First of all, they are going to give you this is a wage and income transcript and the tax period for the year requested. The tax period requested. This has to match the year of the letters that you have received. And what the transcript always starts for the wage and income transcript always begins with the W-2. So this W-2 is just this W-2 wage and tax statement is just the copy of the W-2 that you receive from your employer. It's just the transcription of those amounts that are in a form to this listed in a column or in lines. These are the lines. These lines with numbers are the boxes from the IRS W-2 form. Same thing with the 1099. 1099 will tell you the amount that is reported on the 1099. In this case, there are 2 with the amount that has been reported. These amounts are the ones that I need to use to amend my tax return. Amendment means that I have to redo my tax return, including this amount of income, but also including the amount of expenses. But again, never do a 1099 form reporting expenses with a loss, meaning that do not report expenses over income, never. In addition to request this transcript, this wage and income transcript by the fund, there is also the option to request them online. You just need to type IRS transcripts online, IRS transcripts online, and the first, Get Transcripts Internal Revenue Service, the first link will take you to the IRS page and request online. You can also request them by mail. You can request them online, or you can request them by mail. It will take 5 to 10 calendar days. Requesting by mail is easy because you don't have to create an account. If you request a transcript by mail, they are going to tell you, they are going to ask you some questions. We will not go beyond this. This is it's authorized only use. But you can request them even by phone, by calling to the number that I gave you here, 1-800-829-3903. They will send, if you have a fax, they will give you the wage and income statement by fax. If not, they will send you by email. But you also have the option to request them online, but you need some information. Whenever you request transcript online, you need to have a set of forms. First of all, you need to create an account. Before to create the account, they are going to ask you for some specific information. It will take 15 minutes, but you need all this information. You need the name, email, birthday, the social security number, tax filing status and current address. The tax filing status, you need to check it from your form 1040 when you report it. If you don't want to go through all these subjects, all these letters, or all these call phones with the IRS, you can also hire a CPA, a tax professional. Just know that the only qualified professionals to deal with the IRS for debt problems, tax debt problems, are attorneys, CPAs, and enrolled agents. So if you listen to the radio or watch on TV or cable, there is someone offering a big discount of your tax debt, and that person is not an attorney, a CPA, or an enrolled agent, just pass the offer, because it is illegal for someone without those qualifications, an attorney, a CPA, or an enrolled agent. It is illegal to deal with the IRS and will not be able to solve your problem. My name is Fulton Abraham Sanchez. Our firm, FAS CPA and Consultant, is very interested in you to fix your IRS debt problems. You can follow us in our YouTube channel and watch our videos. You can also send us an email, support@fascpaandconsultants.com. We will be happy to answer to your question.